Look at your euro to US dollar chart right now. You see a clean, one-way sell-off, and your brain is telling you to short more. That is exactly where the trap is laid. I'm going to show you one danger zone and one hidden opportunity that will define the entire session. On screen you're seeing the number 1.1385. That was supposed to be the floor. It just broke. If you chase this move blindly, you will become the liquidity. Stay with me to the end. I'm giving you 2 scalping setups that can pay you in the next hour, and 1 swing trade that positions you for the next 300 pips of the trend. This is not a forecast. This is a plan. My session bias is aggressive fade retrace into the dominant sell structure. We are trending deeply on the monthly, weekly, daily, 5-hour, and 1-hour charts. That is a full house strong sell on every time frame you care about. The euro is being crushed by a double barrel of weak inflation and a secret ECB policy shift that the market hasn't fully digested yet. But here is the single invalidation level that resets everything. If euro to US dollar closes a 4-hour candle back above 1.1440, I will stop selling. Write that number down. 1.1440. Above that, the trend structure breaks its lower high sequence and we flip to neutral. Until then, every bounce is a short entry signal. Now, the herd is positioned almost entirely short. I can see it in the sentiment readings and the positioning data I follow. That matters because when the crowd is one-sided, the market often does a fast, violent stop run right before the next leg. That's the trap. I'll show you how to use it. Let's pull the lens back and walk the chart from top to bottom, because the sequence is textbook. On the weekly chart, the euro to US dollar has carved a massive lower high at 1.1547, right at the 50-day moving average, which is now curling down. Price is trading below the 200-day MA, which is at 1.1568 and sloping lower as well. This is a death cross structure that hasn't fired yet but is coiling. The MACD on the weekly is firmly negative, signal line above, histogram making fresh lows. There is zero bullish divergence here. Drop to the daily. Today's price, 1.1379, is comfortably below every major daily moving average I track, the 5-day at 1.1395, the 10-day at 1.1417, and the pivotal 20-day at 1.1465. The 20-day is the level that has capped every single bounce attempt this week. As long as price stays below that 20-day, the bears own the direction. The RSI on the daily is at 33.77, not yet oversold. That means there is room to fall. The stochastic is 32.6, crossing lower, and the MACD is minus 0.007 and accelerating. Williams %R is at minus 81.8, dancing near the oversold boundary but without a bullish flip candle yet. This tells me momentum is still strong to the downside, and buying here is catching a falling knife until we see a clear reversal pattern. Now go down to the 4-hour. I can see the moving averages stacked like this. The 20 on the 4H is crossing below the 60, and the 60 is already below the 200. That's a bearish alignment in all 3 time dimensions. The ADX is above 30, specifically 30.21, which tells me this is a trending move, not a sideways chop. In a trend above 30 on the ADX, you trade pullbacks to the moving average, not breakouts. Remember that. Here's what most traders miss. The price just sliced through the pivot point of 1.1411 and the first support at 1.1385 without any hesitation. The volume profile shows air pockets down to S2 at 1.1356 and then S3 at 1.1330. That's where the next liquidity pull sits. We also have an ATR of 62 pips. That means a normal daily range can easily carry us from 1.1385 down to 1.1330 within a single session. That's the mechanism. But there's a hidden divergence trying to form. On the 60-minute chart, the CCI is at minus 70.7, and the RSI is trying to base near 33. If we get a little consolidation here, we could see a small bullish divergence develop on the 5-minute chart that triggers the liquidity grab I mentioned. That's the opportunity within the danger. The newswire dropped a bombshell. Exclusive. The ECB is considering lifting banks' minimum reserve requirements to lessen its own losses. Read that again. The central bank is trying to shrink its balance sheet costs by forcing commercial banks to hold more reserves at the ECB. That, effectively, drains excess liquidity from the system and acts like a stealth tightening. At a time when the economy is already showing cooling inflation. It's a policy contradiction that creates volatility, and then we got the hard data. Eurozone inflation cooled by more than expected. That gave the euro the final push lower in the Asian session. So the fundamental picture is a 1-2 punch. Dovish economic data plus a stealth liquidity draining measure that scares capital. No surprise the euro is the weakest major currency today. Now, crosslink this to the dollar side. I'm watching the 2-year yield spread between German bonds and US Treasuries. That spread widened another 4 basis points in the US evening, favoring the dollar. That's why the euro is falling even while US equity futures are tentative. This is not a risk-off move, it's a pure European underperformance story. For the next 1 to 2 weeks, my directional lean remains short euro to US dollar as long as we stay below that 1.14401.1465 resistance cluster. The only event that would invalidate this bearish view is a clear ECB pushback on the reserve requirement report, or a US data miss big enough to crash the dollar index below 103. Neither looks imminent, but I'm watching .so. Here's your second interaction trigger. Do you think the euro breaks 1.13 this week? Comment yes or no right now. I'm tracking consensus. The comments will tell me if we are too bearish. Most people skip this section. That's exactly where the money is made. Keep watching. I'm about to lay out exact entries, exact stops, and exact targets. These are not ideas. These are executable trade plans. Strategy 1, the opening scalp I call. This the snipe. The level we need is the freshly broken 1.1385 support. Old support becomes new resistance. Watch the 5-minute chart. If price pulls back up to 1.1385 and prints a bearish engulfing candle or a clear shooting star with a wick rejection, you sell. Entry on the break of that candle's low with a limit at 1.1385, or market on the close below 1.1380. Stop loss goes at 1.1405, just above the Asian session high and the 5-hour VWAP. That's 20 pips of risk. Take profit 1 is at 1.1356. That's today's S2 and the first liquidity target. That gives you a 1 minute and 1.5 seconds risk reward right off the bat. If momentum is violent, I'll let a runner go to TP2 at 1.1330 for a 1:3-hour trade. This scalp is voided instantly if the 5-minute candle closes above 1.1395. That would be a failure of the resistance flip. Strategy 1, the opening SCLP entry, 1.1385, 5M bearish engulfing after pullback, stop loss, 1.1405 take profit 1. 1.1356 take profit 2, 1.1330 risk, reward, 1:1.5R, TP1, 1:3R, TP2, invalidation, void if 5M candle closes above 1.1395. Strategy 2, the liquidity grab. This is the counternoise scalp that exploits the herd. The strongest bear trap will be set just below 1.1330. That's the S3 level and a psychological magnet. I expect a stop run, price pushes below 1.1330, triggers a wave of breakout seller stops, and then violently snaps back. That's your entry. Watch the 5-minute chart. If price spikes below 1.1330 and then within 2 candles closes back above 1.1330, you buy the close of that reclaim candle. Stop loss goes 8 pips below the wick low, around 1.1312. Target is swift, 1.1356, the S2 level that now acts as internal resistance. This is a 1 minute and 1.5 second scalp with a very tight leash. Do not hold this one beyond the target. It's a trap trade, not a reversal. Fast execution is everything. Strategy 2, the liquidity grab entry. Buy after 5 minutes close above 1.1330 following a false break below stop loss, 1.1312, below the spike low, take profit 1. 1.1356 risk, reward, 1:1.5 invalidation, void if 5M candle does not reclaim 1.1330 within 3 candles of the spike. Are you scalping or swinging this week? Comment scalp or swing right now. I want to see where this community is positioned. It helps me filter the noise. Strategy 3. The session swing. This is the one that aligns with the 4-hour and daily trend. I want to sell the next meaningful pullback into resistance. The key zone is 1.1400 to 1.1420. That's the confluence of the broken pivot, the 1-hour 20-period moving average, and the Asian session breakdown point entry trigger. A 4-hour candle close back above 1.1380 but then a clear rejection at 1.1400 with a bearish pin bar or a full-on engulfing candle on the 1-hour chart. Entry on the break of the pin low. Around 1.1390. Stop loss goes above the daily pivot and the 10-day moving average at 1.1440. That's the structure invalidation I gave you. It's a 50 pip stop. Take profit 1 is at 1.1330, giving a 1:1.2 minimum. TP2 is a stretch target at 1.1270, which is the 161.8% Fibonacci extension of this week's range. I will trail the stop to break even once price hits 1.1350. This swing trade remains valid all week as long as the daily close stays below 1.1440. Strategy 3. The session SNG entry, 1.1390 after bearish 1H rejection at 1.1400 zone stop loss, 1.1440 take profit 1, 1.1330 take profit 2, 1.1270 risk, reward, 1:1.2 TP1, 1:2.4 TP2, invalidation, void if daily close above 1.1440. Here's the non-negotiable. Never risk more than 1% on scalps and 2% max on the swing. These setups are designed with tight mathematics. Stops are mandatory. No moving them. No positions through high-impact US data. This discipline is what keeps you alive for the move that really matters. Scalp the noise, swing the trend, but always protect your capital first. The single most critical level for the next 24 hours is 1.1330. If that level breaks with volume, the entire monthly support structure crumbles and we accelerate towards 1.12. I'll be watching the 4-hour close around that number tomorrow. We have the US ISM services print. A beat on that number will pour gasoline on this dollar move. I'll have the updated blueprint, new levels, new traps, 24 hours from now, before the market opens. You do not want to miss that. If you want the full breakdown on Bitcoin and the S&P 500 divergence, that video is live now. Tap the end screen. It connects directly to the macro forces driving this euro sell-off. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter before the move happens. End screen silent on screen text. Scalp the noise. Swing the trend. See you tomorrow. Let's get paid.